All right, July 23rd, it's a Tuesday, which means nothing to me other than I want to show you this two charts. This one right here in the bottom left, and this guy, the Russell, around 9:30 Central. First of all, when I play this, oh shoot, I gotta highlight this chart. I screwed that up. All right, I'm gonna highlight this chart and play it. Right now, what we do know in here is the market just broke down into this 91, 92. If you're bullish, all right, you recognize the congestion box. Let me pause it again. If you're bullish because you think we're going to rally back to the open or back to point of control if you're a profiler or back to the open, whatever, because we broke about 8 points, kind of filled the gap a little bit from a gap open higher type session. For whatever reason you're bullish, you're looking to get long, fine. What's going to qualify it? First thing you got to recognize is the chop congestion that you're in. Let me blow this chart up. What does that look like? That's this guy right in here. Okay? That's a congestion box. Understand it. Visualize it. You could see a lot of them as you go back, and you get good at recognizing them. And these are overnight sessions. These are all congestion boxes. So let's get rid of those. This is a congestion box that you recognize that we're in. What is a congestion box? What does it mean? It means the market right now is trying to figure out who is going to be too long or too short, who's going to get stuck enough so we could go the other way. There are open, long, and short positions in every congestion box. The bears or shorts want it to go down, and the longs want it to go up for obvious reasons. Sometimes we're stuck in that chop. The breakout is all the people short in here saying SHIT among some other words. And they all chase it to run up. Okay? Now, this was about 9:30 Central. So you could see that as a congestion box. Now let's go back to the footprint, which digs into some of the orders that are coming in, some of the volume that's coming out. And for guys that don't know this, you should know this. All these bars in here, these white bars, it's the same as these rectangular footprints with numbers in it. Period. That is the same as a bar above it, only you could see a little bit more inside. And the numbers represent orders, volume. Now, we know the congestion box. We know the market's just broke, trying to fill the gap. And we know if we can get stuffed shorts in there and you're bullish for another reason, how do you get long? How do you get long? When to get long? When? Let's play it. We're going to keep an eye on a couple things. You're going to keep an eye on this Russell here on the right side, okay? And we're going to let the market play out. I'd like to get some selling to come in and give me an idea where sellers are not getting market prices to go down. I had a good question in one of the YouTube videos the other day. How do you know if it's a short position or a closing of a long position? I said, great question. I don't know all the time, and it doesn't matter. It's still selling, right? If I punch a guy in the face and If I punch a guy in the face and he doesn't flinch, I'm running the other way. Doesn't matter if I'm punching the guy in the face because he said something to my wife or I'm punching him in the face because I said something to his wife. Either way, let me pause it. I'm punching him in the face. And I'm running the other way. So, okay, here's some selling, 93 even. You know the risk. If you try to buy it here, it just rallied from 90.75 to 93.25. You could stay at the top of the range. So you got to be careful, right? And that's not what we were doing. The selling actually drags it down. We're also keeping an eye on the Russell and the Dow and the NASDAQ and the DAX, but just the Russell in this example. So you got order flow with some market relationships to kick your rear end into a trade. I wish this would come a little faster. So it's going to sink back down into this range a little bit, trying to nose its way out. It's trying to rally. It's trying to pop. And we know that. But the timing, see, it comes back down. If you would have bought it up here, you'd have to take some heat. And you have to know where you're at as far as how the rubber band is. And when you buy through the top of consolidation looking for a breakout, you better get a breakout somewhat quick. because it's a momentum trade. What do you want when you take a momentum trade? Momentum. All right, steps back in the range, still trying to work out who are they going to stick, longs or shorts. Are going to re-rally this thing to shake out the shorts who sold it late, who sold it above and didn't take profit. We're waiting, we're moving along. That selling at 93 even or quarter did get the price to move down. It never snuck above it. So they came and defended the top of the range. We come back down in the middle of this range. This is the range, if you want to look where my cursor is, this range in here is this range right here. Only you're looking at it in footprints instead of just straight bar charts. You also hear in an audio, because I have visual edge zones and I got audio edge zones. Female voice means it's imbalanced sellers. A male voice, imbalanced buyers.
To have.
You hear her?
To have. To have.
Now, I start thinking, okay, I don't have to right away jump because the market's kind of slow right now, but you can start thinking, okay, wait a second. If we get above that spot, I'm thinking the top side of the market could be the right side. The upside could be the right side, right? The breakout of this box is going to be up.
2/4.
Right? So she gets it to come off a little bit. Now there's more selling at 92 quarter, right? So I'm thinking, all right, I think sellers might get grapefruit eyes. We start nosing above it. Now let me stop it a second. You're getting buying that's trying to push it up and sellers that might be, again, grapefruit eyes, getting ready to say a swear word. Let's go to the Russell real quick. Right at this time, I'm going to blow this thing up. Right at this time, right-hand side, you start to see it nose out of its congestion box, right? I'll keep doing it. It's starting to do this. And you got to be able to assume that this is a congestion box right there. Don't try to get scientific. How many swing, if I get a guy to ask me how many swing highs at the top of the box would be a box, I'd throw you out a window if one was close by. That's not good. There are very good questions that I get asked. Most of them are really good. But if I got one that said how many swing highs would constitute a congestion box, that would not be a good question. And it'd be one where I'd probably get in trouble for throwing you out a window. But right in here is a congestion box. And right there, you got to recognize that they jumped. Now, they could jump straight up and come right back. We know that, but all I know is they jumped. And that's what I want to see if I'm long or ready to get long the ES. I want to see every index that has stocks in it in the whole world go up. The Topex in Japan, in Osaka, the Hang Seng, the Kospi, Shanghai, everything. I'm not watching all those markets, but hell, everything in the world go up. If you got a long position in a stock index, right? So let's play this again. This 92 even area has a chance to go up. And this is how we're talking in the trading room in real time. I'm not just going over in hindsight the video. This is what we were thinking, looking at, talking about, predicting, anticipating. Because if you're not anticipating, then you're not going to be able to catch. It's just that simple. If you anticipate when you're walking down a dark alley, guys are going to jump out at you, you could react a little bit better. If you're not, you're going to get your butt kicked, and you're going to be scared. As soon as it got, did you hear say 3 even, and didn't even react? See as they come back through 92.5 where originally they came and sold it? So it's not super, super clean, but it makes super, super sense, right? You got the ancillary over here in the Russell dragging it up. You had a magnet of 98 even right here in the, well, right here the magnets were 97 even because it was bright on the heat map. But you had ancillaries, order flow, and leaving a congestion box. And then if you were bullish for another reason, the question that someone who is reviewing your trades or helping you with your trade should be, why the hell didn't you take that? If you told them I was bullish for this reason, I recognize a breakout potentially at the top of the congestion box. I've seen some sellers potentially get stuck. I've seen the Russell take off through their box. I'd say, and I just wasn't sure. And I'd be, okay, you missed it. You missed a good trade. What do you want? 4 more other reasons? So nothing is easy, but it is easier when you tie correlations with order flow. And anybody that watches my YouTube channel, go find another YouTube channel that talks about intermarket correlations, tying it with order flow. You won't find one. All of it had some predictability to it, but you have to do in this business what you do in every business that ends up working. You have to take good circles of skill, and where the overlap is where your probabilities lie. If you just trade on one skill set, I'm a profiler. Okay, great. That's your only skill set and you're going to make money being a profiler? And they say to me, yeah, Anthony, because I'm a big profiler. I know everything about it. All right. That's like having a handsaw and you're a carpenter. It's your only tool. Good luck. So this was 9:30 Central in the ES. Take it with the Russell. See a little lead in there and just make sure you understand. If you're not knowing what you're looking for, you're not going to find it. Period. End of story. If you're driving around looking for someone and you know what color outfit he has, how tall he is, now you got a chance of finding him. But if you don't even know you're looking for a person, good luck. You're going to drive right by him. You got to know what you're looking for in order to find it. And you'll still miss it sometimes, but at least you know what you're looking for. Anticipation. Strategy building is about taking the same core values and concepts in valuing and predicting price in houses and cars and plane tickets and reapplying them into these markets that also have a price attached to it, that also influence each other, that also have buyers and sellers, demand, supply that's fighting and trying to squeeze the other side out. A boat doesn't float if there's 80 people in it. So everybody's going to start fighting until there's 50 people in it, and then it starts to float again, right? 30 people had to get shook out. Shake out. Sometimes you're part of the shakeout. Sometimes you're the one pushing off, getting people off the boat, and you remain on it. All right? But then you get back on the boat. Have a good rest of the session, guys. One thing I want to leave the YouTube videos with is manage your risk before you take it.